Hello, everyone. Happy Slow Tuesday in the summer. Summer's time, Slow Tuesday. How's everyone doing? Sterling had the right idea. This is a good week to take off, at least through Thursday morning. How's everyone doing? Good morning, John. Good morning, Ro. Good morning, Patrick. Good morning, Richard. Seems a lot more people are taking it off. Hey, there's a bunch of people watching in the background. Come on in and say hi. Good morning, Royal Palms. So, hope everyone is having a fantastic summer so far. Again, there's really not much going on. Good morning, Christoph. All right. I'm not going to waste everybody's time. We'll go through some stuff, the key stuff that I'm looking at least. But today, we already had the NFIB Business Optimism Index, coming in slightly better. But this has still been, not super great. We got Red Book. Red Book's still popping. Red Book is still popping higher. That actually surprised me, that print, but you know what? That's not inflation adjusted though. You got Barr speaking. You got Barr speaking in just 10 minutes. Powell's testimony. Don't know if this is really going to shake anything with the markets right now. Then we have some bill and note auctions. Bowman speaking this afternoon. ADP oil stock change numbers, but this is just a slow summer day. Remember, CPI is Thursday, and even tomorrow there's nothing. So it's really CPI Thursday. So far this morning, got NVIDIA that's still trying to grind higher after triggering the little mini double bottom pattern. Lilly's on a move. Tesla's still resting. Oil's pulling back in the groups. Technology comm services, this good old standby, just grinding higher again. Energy pulling back. Everything else, Fed watch still close to 72% for a September cut. Fear and greed still the upper end of neutral. Brett still really stinks. Schiller PE 36.29 in nosebleed territory. So, earnings, absolutely nothing. I mean, there are, five main companies reporting today, but nothing much. Again, it's not till Friday. Friday kicks off next quarter's earnings seasons with the banks. So that's where we sit there. Just grinding higher on the upper end of the wedge. That's why I'm saying there's not much to talk about. Cycle's now back to the top on the daily. But, we might not see any rollover till potentially Thursday morning, given that CPI numbers 56.66, then 56.83 are next targets. The next major target would be 57.44. Major support 55.85. Minor support is coming in 56.25 area. That's all you need to know. Just remind Tam, okay. Good morning, Jacob. Good morning, Anissa. NASDAQ. Next is 29. 20,900 is the next target there. Let's see out to the longer term. The longer term, we just don't have a great pausing area, so I got to keep going off these shorter terms because here, first, we've already completed these. It's right to there where we pause. We're pausing right now. So this is a very minor pausing area. This is the thing. We haven't even had a good pausing area. So above that, I'd have to go with 21,606, and we might refine that if we do get a better pausing area if the CPI numbers, then 22.8. The longer the pausing area, the more structured it is to use forward harmonics. Just keep that in mind. But until then, if we just keep grinding higher today and tomorrow, next key target is 20,900. The Dow was interesting, though. The Dow, I have the little retracements on here from the highs Monday, May 20th to the lows of the 30th. And we officially tagged the 82, the 87.5. So the 62.5 rule was completed. And you look at the selling pressure here yesterday. You spiked up, hit the 87.5, and then massive selling pressure. Keep this in mind because not just from yesterday, look at back from Tuesday to 25th of June. Where is selling pressure above here? It'll be interesting because if the Dow can get above here and follow through with a close above 40K, from a technical point of view, it could be off to the races, at least in the short term. But until that happens, massive selling pressure up here. So please keep that in mind. Russell, whole lot of nothing to talk about. Nothing to talk about. VIX, nothing to talk about. The DAX, not much to talk about. Little a reversal day today. Cycles at the top. The key level on this pullback, though, because we should still pop. Why? We should still potentially see some higher prices, but the key thing is 18,250 on the pullback on a closing basis. But still, it's gone a whole bunch of nowhere since about Friday, the 21st of June. Little up, little down, but a whole bunch of nowhere. We'll get more movement out of the notes come Thursday, sitting in a very key resistance area. One of the things to learn right now is if there's no setup, don't try to force anything in these summer markets like this, especially going into bigger numbers at the end of the week. If there's no setup, don't even bother. Interesting, because this would technically be a percent beat buy. Doubt it'll get above yesterday's high. You do have cycles closing in on the bottom, going into the CPI numbers. And on the weekly, they're still potentially climbing. So could we see another push higher in the notes after CPI? It's set up for in the charts, but we have to see. 10-2s, still holding a higher base right here. Again, we'll get the movement on Thursday on that. Dollar index, keeping a close eye on this. Because we got cycles low, turning up, coming out of very oversold, and we have a potential percent beat buy on a follow-through close. It's already broken yesterday's high. It needs now to follow through and close above yesterday's high. And then a stop would have to be below yesterday's low. So I am keeping a close eye on that. Because we're also between the 50 and the 62.5 on the pullback, which is the major reversal zone. Crude triggered the double against the rotation zone, but we could easily see 81.50 and then especially 81, which could take it to the bottom of the rotation zone. Now remember, against the rotation zone, slightly lower probabilities. And I would not be aggressively shorting this. But I'd be watching for these key levels for potential shorter-term reversal signals, especially with cycles coming into a low area but not there yet. Because also weekly cycles are at a top. So we may see pullback to consolidation. But there is no aggressive shorting. I would sit up and take notice, though, if we broke below about this 80 area. This 80 area, you got the 50 EMA, you got the prior support base. If we broke below that, that could be putting in a more substantial top. Gold, remember, no close above the 62.5. Big reversal yesterday, but this is the key area. If you want to remember the round numbers, 2,400. That's the only thing. Still long-term in bullish mode. Silver, not as big a pullback yesterday. An inside day. An inside day. Excuse me. So, the key level for silver is 31.71, or if we trade below Friday's low. Other than that, the yen, keeping up, this would be a percent beat buy pullback on a follow-through close. And also a rotation zone pullback, but it has to close above yesterday's high with cycles at the bottom into the rotation zone. So keep an eye on that one too. That's a risky thing because you could always get some Japanese yen intervention. Bitcoin, still trading at the breakdown area against the rotation zone. The double is still a valid setup for a little pop, and I have the level on, and that would take it back to the 50% retracement of this sell-off move, potentially. Remember, these aren't guarantees. The first target, though, area I'd be watching if it does pop is about 60,425. Spiders. Next key target, 558. Trading 556. Other than that, not much to talk about. The major supports all the way back at 550.25. Qs, trading against the target right now. Again, we need to get some longer term pausing bars, but let's just see. The next major, we got a cluster here, but the next target area will be 505.28. I'll get to the other stuff. NVIDIA, remember, it triggered on Friday, little pullback yesterday, today, little pullback on Friday, triggered on Wednesday. Little pullback on Friday, yesterday, still closing above that key level. The first key target is 133.16, gapping up this morning. So do keep an eye on that. Good morning, Ted. Good morning, Charles. If you were to swing trade with overnight holds using the 4-hour chart, how would you use the 1 hour for entries with the 4-hour signal to cut stop loss? That's a very situationally dependent question, Richard. Again, just watch your key retracement harmonics, and I'd be keeping an eye. Are you talking with the futures though? Because that's the only way I like to trade. Still micro futures or mini futures for overnight trading because they're so liquid. Again, that's the key. But for here, let's say you're trading 1 hour. Well, you can always wait and follow through with a close below the 1 hour rotation zone because that generally signals a bigger pullback. For example, or you watch, especially with the follow through on the 8 EMA with the 4 hour. Because why? For example, if you start closing below the rotation zone, see, here's the major support level then. So that's an area, a magnet area, not exact target. And that's in the middle of the 4-hour rotation zone. So that could be a shorter term stop up here, because then I'd be watching for something closer to that for a bounce move potentially. And the other area I'd watch for would be down here. If you're on a slightly longer term, then the real key area is that 4-hour rotation zone bottom. Now there's another stock request. What was that? Where was it? Why can't I find it? I know there was something. Oh, TEM. TEM. Never looked at this thing in my life. Tempest AI. Hold on. Tempest AI. All right. That's actually fascinating. No close above the 62.5 there. Gap opens above there, but no close. 36 is a key closing area. Because I'm just going off the probabilities, even on the shorter term price action. Because there's not much you're going to look at. You can't do anything really with rotation zones. So you see your key opening levels are here, but look at this closing area. That's where 36 is going to be key on a closing area. I'd use that to tip the probabilities. Okay? Now, you do have this mini sloppy double top. So if you start rotating back down, I just want to see where this falls in with the other harmonics. Look, this, let me change the color here. So look at this key area. On any pullback, here's what I've been watching. You have a double and a harmonic cluster, a triple, double harmonic cluster, and the second target from the double, right around this 28.25 area. The technical closing area is 28.43. So if this came down, this would be a very key support level. You start closing below this 28.43, you could easily see a pullback to retest the lows. But that would be a very key support area if you're watching on any rollover play. Other than that, for me to get back bullish, because it's not been able, if we go to a closing chart, you see here, here's the major rollover zone. Take off these again. Here's the major rollover zone, here and here. Closing in there, pushing down. Closing still in the rotations, the rollover zone, pushing down. Closing, rollover zone, pushing down. So, still needs 36 is the key area on any close zone. If you're trying to intraday trade this, I'd want a follow through with a close above 36 because the price has been strongly rejected on a closing basis above that. So there you go. Other than that, you can't use a lot of analysis. Now you can do on these shorter term things, you can do, because you got a pausing bar here. So we can do forward harmonics. And look at this. It just reinforces that 87.5. So let's say you were to close, again, not a prediction, but based off probabilities. If we close above 36, I'd definitely be watching for a stop raise between 38.63 and 39.49. That would be, and I have no interest in this position, but just from a purely technical analysis position, that's where I'd be looking for a stop raise. And then a major target area would be this 41.25, 41.35 area. But it would need to follow through, because right now you're trading against a little mini double top coming out of the key reversal zone. So it would need to do something intraday on a bullish signal to get me interested from an intraday perspective. All right, that's pretty much a good place to leave it. Again, there's so little going on. If you don't have any good setups, do not force trading right now. These are the worst kind of days to force anything. This is where people who say, I need to make X amount every day in trading. These are the kind of days that get them in trouble. Okay, my advice is do not force something. If you have a great setup, fine, trade it. But if you don't be searching for trades. Don't be trying to say, I gotta find something to do. You don't always have to find something to do. Sitting on your hands is a position. It's no position. That's on stop. It depends. Again, that's very situational. On the final positions, because I like to get in and then with multiple, let's just go futures, multiple contracts, then I like to leg out, which means key target areas, I take something off until it's the last little bit. The last little bit is generally taken off by a stop or a counter trend reversal. So, for example, let's say there is a long position in the S&P. We've hit some key levels that'd be unwinding stuff. Now, would I just, if it popped up here and hit this next final and I'm down to, let's say, one contract. Let's say I'm down to one contract. Would I just magically take it off? No. because it can keep just grinding higher. Now, if we got like a 4-hour double top triggered, we get some major price action after CPI and it triggers a key level, that would get taken out by a stop. So if I had to come up with a broad rule, the remaining last little bit is generally taken out by a stop or a triggered reversal pattern. Before that, it's taken off unless we don't get to targets. If a pattern triggers when we don't get to any of the targets, of course it's stopped out. But if we get to at least one target, it's generally something's unwound at a target. So let's say for our double bottom triggers, would it be good to wait for a retrace and then enter in a 1 hour, close back below the trigger level? Depends if it triggers with momentum or not, and what time it triggers. For example, if a 4 out, let's say this overnight trading, European session open, you get some momentum off European session open, 4-hour double triggers. Generally, it can still run. It can still run into the US Open. I can't count on a 1-hour pause or pullback. Let's say you trigger it on an Asian opening. Many times you get the pause or the pullback into the European Open. That's a different story. Then I am more patient going into the European Open. Again, context matters. Let's say something triggers at the end of like the midday European session. Then I usually watch that pullback into the US Open, or at least a pause into the US Open. Again, it's time matters when that kind of stuff happens. So the key things are the market opens, the European Open, the Asian Open, the US Open. For example, let's say some pattern triggers even US at like going into lunchtime. I don't need to aggressively do it. I can wait because many times you get the pullback during lunch. And I'm talking from a long position. And then I can get a better entry. However, a pattern triggers just off the open with momentum. There's no guarantee it's going to pull back. I might do a reverse position size. But you know what? Something triggers off the open with momentum. Though it might not pause until lunchtime, which means I might never get a big enough pullback entry. So that's for more advanced stuff. Time of day really matters. You're welcome, Richard. So if you're going to research something and you want to add another layer into it, start researching when things trigger. And also everybody here knows momentum bars. I think anybody who's been here for a long time. When you see things trigger, especially let's say it triggers on a second momentum bar, don't sit here and wait, oh gosh, I gotta wait for the pullback. Many times the trade's never coming back. When momentum bars trigger a trade, especially wide range momentum bars, they're generally not coming back. Those are the ones you want to come back, but those are the ones that are not coming back. So in order to get proper reward to risk, I necessarily, to get proper reward to risk, have to reduce my position size. But then when you have a trade with momentum bars, you can run the momentum longer. Keep that in mind. So if you take a couple things a day, take into account time of day for more advanced, once you get more advanced, and take account when things trigger with momentum bars. Because those are the ones that don't pause or pull back generally. Unless it's something triggers off when Powell's talking during the Federal Reserve press conference and things are, trading off every other line he says. You're going to get the short-term burst of momentum, but that you have to manage with volatility. That's not the kind of thing I'm talking about. I'm talking about maybe a number triggers a momentum trade, and then it's just going to run, at least into lunchtime. All right, that's a good place to stop it. Thank you for tuning in. Hopefully that information helps people. Hope everyone has a wonderful trading day. Again, don't force anything. Remember, things are backloaded this week. And we will talk to everyone later. Bye for now.